Good morning. This is Mark Soderberg with ADM Investor Services with your morning ag market outlook for Thursday, December 5th. Well, quiet mixed trade here overnight across the ag space. Wheat prices have rebounded about 4 to 6 cents so far as many of the contracts have reached or tested new contract lows here recently. The soybean complex is mixed. Beans have turned steady to about two better in two-sided trade. Meal prices are down about $1, while oil is up about 30 to 35 points. Corn right now is just fractionally mixed. Fresh news overnight is scarce as we await export sales and production updates from Stats Canada. Speculative traders were net sellers in corn, beans, and oil yesterday, light buyers in the wheat and the meal. We've got the speculative long position in corn now still sitting at about 105,000 contracts, while in bean oil it's down to only about 10,000 contracts. Yesterday's EIA report did show ethanol production slipped to just over 315 million gallons. Well, that was down 4% from the previous week's record production. It was pretty much in line with the level we were at a year ago, and also well above the pace needed to reach the USDA corn usage forecast. I look for the USDA to raise this forecast 50 million bushels in next Tuesday's WASDE report, bringing it to 5.5 billion bushels. Second highest now above a year ago, but still behind the record production or record corn usage 7 years ago at just over 5.6 billion. In next Tuesday's report, I look for corn ending stocks to drop 75 million bushels to 1.863 billion. The average trade guess is looking for only about a 30 million bushel reduction. It looks like my estimate is among the lowest in the range of estimates. In the past decade, the USDA has not changed the soybean ending stocks in the December report. 7 out of the last 10 years, there's been no change. I look for that to stay the case this year as well, leaving stocks at 470 million bushels. Over time, I think we could see lower exports, higher crush, but for now, I think the USDA will buy themselves about another month here to watch South American weather and see if we get any sort of tell from the incoming Trump administration on policies moving forward on biofuel mandates and tax credits. I do think we'll see a big jump in bean oil exports, just given the commitments to date, where we are at well over the USDA forecast for the entire marketing year, while bean oil prices remain at a huge discount to palm oil. No change to wheat stocks. Corn prices just continue to find themselves in a 420 to 450 range. We did find support overnight at the 100-day moving average in the March contract at 427.5. Jan beans too remain stuck between $9.75 and $10 now for just over 2 weeks. With South American weather mostly favorable, I do think the path of least resistance remains to the downside. Support below the market at 935. That would be the lows from earlier this year. I think we'll test that unless we do see a quick change or sudden change in South American forecast. We do expect updates from the Buenos Aires grain exchange this afternoon on the Argentine crops. Spot oil just continues to consolidate within the range from a week ago Wednesday. We do have support below the market at the November low at 40.64 for the Jan contract, with resistance at 42.39. I do expect oil to outperform meal moving forward. I think meal will test its $280 low from 2020, that despite having a near record short position by the speculative traders. In wheat, the USDA currently has the southern hemisphere crop pegged up 9 million metric tons year over year. That pretty much offsets the reduction in production we're seeing from Russia. However, recent heavy rains in parts of Australia has likely reduced about 2 to 5 million metric tons of their crop to feed quality. I don't see a lot of downside price risk in wheat as prices hover near 4-year lows. However, right now we just lack some sort of spark to trigger a short covering rally. So thanks for listening, everyone. I hope you have a wonderful day.